I'm Frank Vaughn. It's November 10th, 2025, and I'm smiling like a Cheshire cat because I just spent the last 2 days finally sorting out the audio problem. Do you hear that? Do you hear how crisp and clean that is? We got rid of a malfunctioning piece of hardware. We figured everything out. You probably can't even hear it. I'm tapping the desk. I'm moving around on the desk. You can't hear anything, and the reason you can't hear anything is because I harvested an old mic stand. I used a hacksaw to alter it. I have sticks and another piece of another mic stand. It's all worked together with masking tape so that I can change my mind. We don't want to go to duct tape. Duct tape's way too permanent, makes a mess of everything. So we do the responsible thing and we use masking tape. But I got the whole setup together and we're ready to go nice and clean. I still have to tear the computer apart one more time, which I'm going to do this afternoon, but it's more of a maintenance thing. And I didn't really know what to do with this video because I'm feeling rather celebratory. But I think I'm going to start with foreclosures and power of sales in Ontario. They're through the roof. Like power of sales on real estate. There's something like 99% higher than they were last year. There's a lot of reasons for that. The wheels have come off the real estate market. It's been in decline basically since I left Ontario. 3.5 years of year-over-year declines, especially in the GTA. There's certain areas that have bucked the trend, but for everybody that bought one of those really overpriced houses in February or March of 2022, you're wrecked. You're wrecked, and you're just trying to hang on. And whether you're somebody who bought it to live in or somebody who bought it as an investment, very difficult to walk away at a loss. And I understand that. It's painful, because you're going to end up paying for something that you no longer have, and that sucks. But the market isn't producing the results that a lot of people need. And so they're missing mortgage payments. And, after you go 90 days, that's when the lawyers get involved. And once the lawyers get involved, things start getting much more expensive to dig yourself out. And if you couldn't afford a mortgage payment 3 months ago, you're certainly not going to be able to afford 3 mortgage payments and all of the legal fees that come along with going to the process of having your home taken away from you and sold out from under you. So nobody wants to sell at the prices the market is currently giving because it would equate to a loss. But once you get to power of sale, the bank doesn't want your property either. They're going to take your property and they're going to try and sell it as quickly as possible, because once they take your property, they assume all the expenses for the property, and that sucks because bank margins aren't that great, believe it or not. It's criminal on the one hand that the banks, not just the central bank, but the banks themselves can create credit out of nothing. But on the flip side, the margin of their profit is such that they can't afford to just hold everybody's real estate. They don't want your house. They want the interest payments. So as this process advances and as the snowball keeps rolling forward, it's actually bank foreclosures and powers of sale that are going to start the, I would say, meteoric decline in real estate prices. And I don't think, that there's people who are trying to hold on for a recovery. And I see way too many influencers on YouTube telling people that 2026 will be a great year. Everything will be back to normal in real estate. It's not going to happen. Really bad advice. Things are going to be bad for a while. And we know that because, Parliament's actively lying to us. They're basically saying they're going to run a $300 billion deficit based on GDP growth. Not only are they including the CPP in their asset column, which should worry everybody after the video I produced Thursday talking about the CPP, and then I went on Clyde's live stream. I don't know if there might be some of you out there who don't know that, but I went on Clyde Do Something's thing on Friday, and part of what we talked about was that very thing. They're also basing their projections for federal revenue on GDP growth, except GDP growth up to this point has been driven by government spending, which is crazy on its own. But the fact is, we're in a technical recession, in my view, already, and we're only going to get deeper into it. The troubles for Canada are just getting ramped up. So that federal deficit that they're projecting at $300 billion, and by the way, they talked about a $69 billion deficit when Mark Carney first got elected. Now we're up to whatever it is, 79, 78 billion was their current projection for fiscal year 2025. I'm telling you, by the time It's all done. It'll be $100 billion, but it remains to be seen. It doesn't matter. Canada is in a dire economic pickle, and everybody that's been rolling over their debt into the equity of their houses is going to be in deep trouble. I know people, they refinance their house, they go on trips to Europe, they go down to Disneyland, they buy an RV, they do all this debt spending, and they treat their house like a piggy bank that will just always be there and will forever grow. And it's been good. This has been actually a working model up to March of 2022. It's worked like clockwork. For 12 years, you could just roll over, get that cheap money, and you could go and do things with it. The problem is when you're buying these frivolous things, you're not generating return. I'm not against people using credit to generate returns, to invest in your business, to invest in yourself, to make an investment that's going to make money. That's what credit's there for, especially cheap credit. It's also there as a good bridge between low points and high points. But you should never be objectively looking to use credit like it's the same as money, because the biggest tax you're ever going to face in your life outside of government is the interest you pay on your mortgage, which is why I'm a big advocate for terminating your mortgage debt as fast as you possibly can. You should be rolling your change. You should be skimping. And you should be trying to get rid of that, because it's just a tax on your life over and above what you pay to the government. At any rate, there's a lot of people in a lot of trouble. And it's always interesting to me how, you hear these headlines about people living paycheck to paycheck, how they can't get ahead, and I understand that. But there's also this lack of credit availability. And as much as there's a bunch of other things I'd like to talk about today, considering I'm just here happy that the audio is working and most of my problems are solved, I thought I'd provide my financial experience. I'm not going to call it, this is not financial advice. This is financial experience. I'm telling you what I've done over all these years and how I've used credit to make my life better. And it all started, I don't know, I was 21 years old. I had this 1982 Ford F100. It was my dad's truck at one time. He went bankrupt, I don't know, 1996, 1997 in this little pickup, which he loved so much. When I was a kid, I remember I was loading wood into it, and I hucked a piece of wood right through the back window. So Dad got this sporty window, 4 panes that would open. And he was really proud of that truck. And then when he went bankrupt, he lost the truck. And the truck ended up parked in the forest for many years at the far end back of this property. And I went and tracked it down. I hauled it out of there and I fixed it up and I was putting it on the road. But I had an at-fault accident from when I was 19. I had a little Chrysler New Yorker, and I hit a car hard enough that it hit another vehicle in front of it in a school zone in town. It was a bad scene. And it's the only accident I have ever been in. And it was totally my fault. And I remember I got arrested. I was driven to the police station in the cruiser. They charged me with careless driving, which was an accurate charge. I remember I was in the interrogation room, and as soon as I got in there, I was looking, my buddy was sitting beside me. He's like, "Shut up." I'm like, "Why would I shut up?" I looked at the camera and I'm like, "Guilty. I'm guilty. I did it. Totally my responsibility." And the cop came in and he's like, "Well, I don't really have anything left to do here. So I guess, here's your court date and you're released." And when I went to court, the Crown, the officer who dealt with me, he didn't arrest me. Can't really call it an arrest, but the cop who dealt with me took me to the police station and charged me. And the 2 vehicles that I hit were sufficiently moved by my forthright behavior that they recommended the charge of careless be dropped. And I ended up with a lesser fine of following too close, which was awesome. Like I was deeply appreciative. And that's an example of how kindness and honesty sometimes really pays off and works out for you. It's got to be sincere. You can't play a game, but you have to be sincere about it. At any rate, I still had an at-fault accident on my insurance record, which is brutal. So back to the 1982 F100, I had to insure it and get it on the road because I needed it. I needed it for work. I was in desperate straits, and it was the only vehicle I had. So I went to the insurance company and they said, well, there's only one company, Facility Insurance. Many of you might if you've ever done anything wrong, you've probably ran into Facility at some point in the past. The broker in $2,001 told me that I needed to come up with $2,900 cash. Couldn't go on monthly payments. I had to have $2,900 cash for 1 year's insurance. Hit like a ton of bricks. So I went to the bank and I pulled at 22% interest, $2,900 off a credit card. And then I went back to the insurance broker and I gave him that $2,900 in cash because I had nothing else I could do. And he offered me his hand, as to shake hands after we concluded our deal. And I squeezed his hand so hard I heard his knuckles crack. I made him wince. And then I walked out of his office. And I'll be honest with you, I've regretted that since I did it because it wasn't his fault. It was my fault ultimately. And it wasn't him that was dictating the price. It was the insurance company. And I had this revelation that insurance brokers are the person that's put between you and the insurance company so that you'll yell at them, so that you'll crush their hands, so that you'll be angry with them, and the insurance company never has to deal with any of that. And from that day forward, I made the determination that I'm always going to treat my insurance broker much better than they might otherwise be treated. And that's helped me out at different points. It's made things easy. Again, kindness and patience rather than anger and yelling and belligerence tends to get you better results. So why am I telling you all this? It's because I started playing a game at that time, and it's the game. It's the credit game. And I'm not talking about lying. I'm not talking about doing fraudulent behavior. I'm talking about understanding the rules of credit and understanding how you build it. Not just your credit rating. That's only one piece of it. And as a matter of fact, what I'm going to talk about in my experience is generating regular hits to your credit rating is actually a good strategy. Now, what do I mean by that? I don't mean by not paying your bills. You should always pay your bills. Even if you have to use credit to pay your bills, always pay your bills. What I'm talking about is after that experience, I really didn't like a 22% interest rate. Might actually have been 28. I don't recall. It was high. So I went to my bank and I applied for 7 different credit cards and 2 lines of credit at the exact same time. I submitted all the applications at the exact same time, just hoping that I would get them all approved at once before they would turn me down. That's when I learned that there's a limit to how many approvals you can actually get before there's just a hard cap and they stop the entire procedure. So I got, I think it was 2 credit cards approved and 1 line of credit, and then they just hard capped that, and that was all I could get. And again, my credit rating took a hit. But I got my credit going. And then every 6 months to a year, I would call up the bank and I would ask for higher credit limits and lower interest payments, both of those things. And because you're making the request, you take a credit hit, but it doesn't matter. It really doesn't matter. Because if you're not intending to borrow, if you're doing this before you need it, it doesn't matter what your credit rating is. If you've already got your car lined up, you've already got your home lined up, and you got an income coming in of some kind, even if you're just breaking even, your credit rating doesn't matter because you don't need to take a loan. What you're doing is you're increasing your credit limits and you're lowering your interest payments, and you're doing it with a plan every 6 months to a year. And as you move forward through time, the bank and the lenders are going to do it for you. So, the first line of credit I had, I think, was 14% at the bottom of the Audis. And my current line of credit, my best line of credit, is completely unsecured at this stage. They will loan me an ungodly amount of money. And it's I think my current credit or interest payment is 6.45%. Unsecured. And that's not to talk about my credit cards or the other lines of credit that I never use because it's debt, right? You don't want to just get this stuff so that you can go on trips or buy fancy cars or do all this stupid stuff. You just want to have a pool of capital in case you need it. What might you need it for? Well, you might need it to invest in a business, to get yourself some kind of degree, not a liberal arts degree, get yourself into a trade, get something useful so that you can go out there and generate money. When I was operating the farm, every spring I needed $20,000 to $25,000. to finance the operation, to buy seed, to buy pots, to buy materials, to get the thing going. And it was nice that I had a nice, cheap source of credit to do that with. These are all fine ways to spend money. One way that I spent credit, which wasn't so smart, was when I ran for election in 2019. I was deeply concerned about obeying every single rule that Elections Canada had and going to the nth degree to make sure that I wasn't running foul of the law. So I just stopped making money. I literally just, once I decided in the summer I was going to run in a federal election, I stopped making income from every single source by decision. And by the time I got through the federal election in November and December, and this wasn't even paying campaign expenses. There wasn't very many campaign expenses. This was just paying my bills and making sure that I didn't want any money. It was probably silly, but I used credit to finance that. Having that cheap pool of credit enabled that stupid decision. But I don't want people to make stupid decisions. Why it's handy to have done this before you need it is, for one thing, if you call up the bank and you ask them for a higher credit limit or a lower interest payment, you're probably going to get it, especially if you do it before you need the money. But then before you know it, if you're paying your bills on a regular basis and you make sure you don't miss it, this includes that period of time in 2019 I'm talking about, paying my mortgage and paying my bills off a line of credit still advances your credit rating because you're making your bill payments on time. It's okay in certain situations to use credit to pay your bills, as long as you got a plan for getting out of it later. So as you advance through time and you keep up these business dealings, eventually you're going to call up the bank, and before you even ask for a credit limit increase or a lower interest payment, they're going to offer it to you. You're going to get to a point, because you have such high credit limits and you have such low interest rates and you have such a good credit rating, because again, you've been spending your credit rating to get your limits increased, but it gets to a point where your credit rating, it always recovers. It gets high enough, your credit limits are growing, and your credit utilization is very low. So the bank's like, this is a great customer. And so as soon as you call them up, before you even ask the question, they're offering you a deal. They're offering you, they'll give you $30,000 for 2 or 2.5%. for the first year. All you got to do is pay a 2.5% fee up front, and you can have that capital. Well, that's kind of handy. I use that for the farm. I'd just borrow $25,000. I'd pay a 2% fee on it, and I'd be covered for that year. And if you held that balance for even 4 or 5 months, you were already way ahead in terms of the interest payment. And even if it took you till fall to pay it off, it was the cheapest money you could possibly get. You can still get those kinds of deals. The current rate is 2.5%. Say on a credit card that you've had for a while, you have to do this over the long term. You have to build this over years, and you should start today. You really should. There's no harm in it. It's not going to cost you anything to build your credit limits up. But I think the going rate, the best rate on a credit card is 2.5% for a year. And you literally just write a check to yourself. And you've got money. You still have to pay it back. You know what I mean? It's not like these are options. You're building options. You're not looking to actually do it. And why it has relevance in this whole foreclosure power of sale thing is that people aren't doing this. They don't have the ability to bridge the gap using credit products to keep everything afloat until they can make all the ends meet. To weather a storm, a financial storm of years, bouncing credit products back and forth and not costing yourself a fortune while you're doing it, if you had to. I've only been in that situation once because I decided to run in a federal election. And it took me a few years to fix that. But I'm only saying this because I think if you're a responsible person, you pay your bills and you don't like debt, you abhor debt, that's a good place to be. Doesn't mean you shouldn't build a base of capital resources that you can borrow cheap, finding cheap capital, aiming to get as much cheap capital pre-approved and lined up as you possibly can before you need it. because you never know. Maybe there's an opportunity to buy into a business. Maybe there's just a blaring financial opportunity and you don't have a pool of capital. Not a lot of us have thousands of dollars just sitting around doing nothing. But if you've got a pool of cheap capital that you've built up over time, you can take advantage of it. Or say you bought property at the wrong time and you're underwater. Maybe it makes sense to float the difference for a few years until you see a recovery using the cheap credit that you've already built up over the course of time when you didn't need it. Now, the key here is you're not taking trips to Disneyland. You're not taking trips across the country. You're not buying a boat. You're not buying a truck you don't need. You're not doing stupid things with it. You're not buying a second home. You're not leveraging yourself to the tits to buy frivolous stuff. You're trying to hold your balances at zero. You're trying to keep that pool of credit available in case you want to buy something. I've been flirting around with buying a computer. I don't think I need to now. I think after today, everything's going to be just fine for another little while. I can't upgrade my computer to Windows 11. That's going to be a problem, but I've got security coverage on that until October for free from Microsoft. So I think I'm just going to keep on gimping along. But the fact is if I needed something, I've got an unsecured line of credit I could use. 6.45%. Unsecured. A very high credit limit if I needed it. I don't use it, but if I needed it, it's there. It also enables you as well if you can help other people using the bank's money. Say you've got a friend or you got a family member and they're trying to buy a house or they're trying to finance something and you know they're good for it. You know they're the best customer in the world, but maybe they haven't gone through this procedure that I'm describing. So they don't have a credit pool that they can draw off, or maybe the circumstances of what they're trying to purchase and get themselves into requires that they have ready cash available in a bank account that they can't just borrow themselves and put in that bank account. They have to get from somewhere else. Maybe they got to get it from a family member. You'll have this pool of resources that you've built up that you can then get involved and help them out. And that's really awesome. I've done it a couple times in my life. And I haven't been bitten by it because you only do it when you can trust people. Anyway, this is definitely a different vibe. But it's all to say that people get in trouble because they're not financially disciplined. It's not debt itself. Maybe this is a bit of a, risque thing to say. It's not debt itself that's bad. Debt can be a good thing. It can be a useful tool. I've used it many times in my life to advance my own interests. In some ways that some people might consider degenerate, but it was never in the pursuit of luxuries, trips, and stuff that doesn't produce a return. Everything I've ever done with debt produces a return. It was for business purposes. And the only reason I could do the things that I've done in order to survive as long as I have in this world is because I started building it before I needed it. And so just to cap this off, because I see a lot of people in trouble out there, and I have to wonder if they had done this procedure ahead of time, would they be then able to use their credit to float themselves until they could get themselves out of the situation they're in, being underwater on mortgages or car payments or anything else, if they had been building things as they went forward? That's another thing. Never buy a new car. Always buy used. Used cars are great. But at any rate, the procedure is every 6 months to a year, call up the bank. If you don't have any credit or you have low credit limits, every 6 months to a year, call up the bank and ask for increases. Do it religiously. Do it for years. And if they give it to you, don't spend them. Don't spend them. Just because you have access to something doesn't mean you should use it. Just sit on this pool and grow that pool of capital. Take a few years, grow it out. And you'll get to a point where your credit limits are so high and you'll have good interest rates. You'll have bad interest rates, but you'll have good interest rates as well. I haven't even taken this as far as I could. You could do this with every single bank, and you're not breaking any laws, folks. They're going to ask you what your income is. Tell them what your income is. I mean, there's sometimes it's hard to say. You got a financial plan as an entrepreneur, and you think you're going to make 80 or 100K in a year, and then it turns out you only made 45. As long as your intention wasn't to mislead the bank, you're allowed to have fluctuating income. So, I mean, that's something to keep in mind. But like if you wanted to take it all the way, you could have TD, the Bank of Montreal, the Bank of Nova Scotia, CIBC. You could have products from all of these banks. If you take a multi-year approach, you could have products from all of these banks, and you could be, I mean, there was one time, this is the kind of power that you get with zero balances, with no debt. I'm glad I thought of this. I went into my bank. I got a letter from my bank randomly one day, and they're like, your interest rate at the time was 4.75%. And the letter said, periodically we review the account status of our customers, and we have decided to arbitrarily increase your interest rate to 9%. I think that's right. I had my farm float on that line of credit. It was something like $20,000 balance, let's just say. I don't know the exact number, but I think I owed them 20 grand at the time, and they're just like, yep, you're going from 4 points to 9 points. And because I had all these other credit products, I took that letter, I dropped everything, I drove down to the branch, and I said, this is unacceptable. This isn't going to happen. And the chick said, well, there's nothing we can do. And I said, give me the branch manager. I want to talk to them now. And I was polite, again, kindness. But I said, this is unacceptable. This is offensive. I've never missed a payment with you people, and this is what you're going to do to me? And they're like, well, there's nothing we can do. 9% is the lowest we give anybody. And I said, okay, close my account. And they're like, what? I said, close it. Close the line of credit. Give me my money back, and I'm out of here. And they're like, well, you got to pay it off first. And I'm like, sure. And I pulled out the Bank of Nova Scotia. I wrote a check. I gave it to them. I paid it off. I might have actually went and had to get a money order because I had to make the point. I think that's what I did. I did something I could do it instant that day. I paid my balance out, or I transferred it out somehow. I don't really recall how it went down. I closed my bank account. I closed my line of credit, and I canceled every product I had on the spot with that bank. They were in shock. They'd never seen it before. And I went home. Within a day, the next day, I get a phone call from that branch manager. And she says, we want you to come back. We want you to come back to us. We'll give you a line of credit at a higher credit limit, and we will give you your old interest rate back. We've made a big mistake. We're sorry. And I went back down there. I reopened my bank accounts. I got that line of credit. I still have that line of credit to this day, that unsecured line of credit, which is now running at 6.45%. And I am carrying a balance on it right now. But again, it's strategic. It's strategic. I know why I'm carrying that balance, and I'm comfortable with it. I'm not using it for trips or luxuries or anything else. But that's the kind of stuff you can do if you build this stuff out. And you can do it at multiple banks. There's nothing saying you can't have credit products at every single bank. There's nothing wrong with it. There's nothing fraudulent about it. And you can build your credit limits up, and you can lower your interest payments so that you have options. The objective is to have options. It's not to use the products. It's to have them available to you when you got to float through trouble. There's a lot of people right now losing their shirts, facing bankruptcy, going into foreclosure. And I think a lot of it has to do with the fact that for one thing, they're financially undisciplined. So they're spending more than they're bringing in, and they're doing it, and they're spending on stupid stuff. But I think there's also a lot of people out there who are actually really good with their money. They're very disciplined, and they just have not built up credit products. They have not strategically built up their credit limits. And so they don't have the ability, the available capital to float themselves through trouble. So I don't know. This is a different video, totally different from anything I've done on the channel. But, that's a strategy that served me very well through life. And I'm not a rich man. I've never been a rich man. My income has always been very modest. And my focus has always been to stretch it as far as it can go. I live very frugally. And I remember somebody was all bent out of shape. They're like, your kids have so many toys. It's like, yep, Facebook Marketplace exists. Libraries are dumping books right now. I mean, the library sales that we have, Like I've filled bookshelves with books for myself, and we've got a whole library in the kids' schoolroom full of books on every single subject. I think we paid something like $5 for a shopping bag full of books. I mean, you can do a lot for very little if you invest time in making your dollar stretch. There's some things like food, the rising cost of food. I'm not trying to say that inflation's not a problem, because it is. But you can make a little amount of money go a long way. And anyway, I'm getting off course here. The basics are simple. Never be afraid to call the bank and ask for a credit limit increase. Never be afraid that it's going to take that your credit limit or your credit rating is going to take a hit. That's what it's there for. Credit rating is like a pool of resource, and you spend it by applying for loans. And yeah, it'll go down, but it'll bounce back up, especially if you're not taking money out or you're just using credit cards strategically in a month and paying that balance off. It's just going to pop back up, and then you can spend it again, and you keep doing that for years. And before you know it, you've got pools of capital everywhere, and you have the discipline to only use them when it makes sense from a business or a financial perspective. I'm Frank Vaughn. This is awesome. I'm so happy with the audio. This is a different video. We'll get back to something normal on the next one. Hopefully somebody gets some utility out of this. I'll watch the comments. If anybody has any questions or you want to tell me that the whole thing I've just said is stupid, again, it's not financial advice. It's just financial experience. I've done well this way with this method in my life, and it's helped me ease through some problems that otherwise might have tanked me if I hadn't had credit resources available. I'm Frank Vaughn. I'll see you in the next one.